All right, let's talk about a story that is absolutely reshaping the tech landscape. As a financial analyst, every so often you see a move that changes the entire game. And folks, that is exactly what we're looking at today. The insane, multi-billion-dollar tug-of-war for a single AI startup, Anthropic. We're going to break down the numbers, the strategy, and what it all means. So first up, let's just get a sense of the scale we're dealing with. Google has committed up to a staggering $40 billion to Anthropic. Now, let's be clear, this isn't just a big investment. This is one of the largest bets ever made on a private AI company. It's a move that sends shockwaves through the entire market. And then, just when you think it can't get any crazier, Amazon jumps into the ring. They've pledged their own massive sum, up to $25 billion. And get this, it's for the exact same company. You've got two of the biggest rivals in tech history pouring a combined $65 billion into one startup. Just wild. So, you have to ask the obvious question, right? What on earth is going on here? Why are these two titans backing the same horse in this AI race? Well, it is a fascinating, complex power play, and we're going to unpack it right now. Okay, so to really understand why they're making this massive bet, we have to look at the asset itself. What is it about Anthropic that has everyone willing to open up their wallets to this degree? Well, the insiders are putting it pretty bluntly. They're calling Anthropic the AI industry's most coveted startup. From an investment standpoint, that means they have all the leverage. They've become the absolute center of gravity in this global AI arms race. And here is the hard data that backs up all the hype. Just look at this growth chart. Anthropic's annualized revenue, basically what they're on track to make in a year, more than tripled in a single quarter. They shot up from a $9 billion run rate to a $30 billion run rate. That growth is so fast, it's actually outpacing OpenAI. That is just remarkable. So what's fueling this rocket ship? A huge part of it is a specific product that's found a super lucrative niche. It's called Claude Code, and enterprise clients are loving it. Now, from an analyst's perspective, this is the holy grail. We're talking sticky, high-paying customers that lock in stable, long-term revenue. It's a dream scenario. And all of this incredible performance led to a jaw-dropping valuation of $38 billion back in February. But the momentum hasn't slowed down one bit. Some informal reports are now throwing around numbers as high as $80 billion. The hype and the valuation are just completely off the charts. Okay, so that's the what. Now for the why. Let's get to the core of our analysis here, the strategy. How do these mind-boggling numbers fit into a bigger power play for Google and Amazon? This is where it gets really interesting.